Welcome back, folks. This is Rick with Momentum Options Trading. We got a lot to cover tonight, so I want to give you an overview of what we're going to try to cover, and I want to thank everybody for upgrading their membership to the one-year deals, because these videos are a lot easier for me to do, and I want to give you a better deal and make you a better trader. So appreciate the business. So let's get down to some trades here. The first thing I want to cover for those of you who are new, you can see I'm on Yahoo Finance, and what I like to do at night before the European markets open, which is at 3 a.m. Eastern Time, is take a look at the futures. Most of the time, if you don't have a TV or something, you're just on your laptop, you can type in futures, and you'll see the Bloomberg site here, and then just click on that. And as you can see, Dow futures are up almost 80 points. The S&P futures are up 9, and the NASDAQ futures are up almost 20. So it looks like we're going to have a big start for Tuesday morning, coming off Friday's downgrade by the S&P, which really wasn't a big deal, even though it seemed like it at the open. But with the way we bounced back, it was pretty impressive, and it looks like we're going to challenge the upper targets from last July. So let me cover the charts with you real quick, and then we'll go into some of the trades. Okay, going into the back half of 2011 in December, we were talking about, or I was talking a lot about Dow 12,000, Dow 12.2, and then once we got that kind of Santa Claus rally, how we needed to clear 12,350. So if we bring up a chart here, I'm going to give you some of the resistance levels I've been talking about, and then we can cover support, and then hopefully higher resistance levels. Okay. So you can see right here near the end of December, the Dow was right around 12.2, and then we got this little mini breakout, which let me go ahead and draw some lines for you. Let's see.
Do you have a forecast
Okay.
for the euro? Should things surprise on the upside? Should European
Here's Dow 12.2. Yeah, let me make that a little bit smaller. Let's see. But anyway, let's see if I can do this real quick. There's the breakout we got, okay? And then we cleared 12,350, which is kind of right through here. Okay, now if we go back to a longer term chart, let's see. You can see where 12.8 is going to come into play, which is the July highs, which is kind of right here, if we look straight up through there. But the other thing I want to show you on this chart is we've had this bullish trend, despite all the pullbacks and the trading ranges since October of 2010. So as you can see, as we get this line drawn, kind of somewhere in there, you know, the break back down this way is when we would buy puts, but for now we're still bullish. So let me get a new chart here. Let's see.
21st Century Insurance here with two identical cars, or what used to be cars. One was covered by them.
Right, bear with me. All right, so let's go look at the S&P.
Both were covered against total loss, so both cars can be replaced. Here's the difference, though. Drivers who switched to 21st Save an average of $4.92.
Same deal here. Once we got over 1250, you know, I've said we try to run the 1275, 1300, and then once we get over 1300, we could see, you know, the run to 1325, 1350. So 1250 is kind of right. Let's see here.
Medicare. It doesn't cover everything, and what it doesn't cover can cost
About right through there.
That's why you should consider.
As you can see, we've also channeled higher since October 2010.
Medicare supplement insurance plans can help pay some of what Medicare doesn't, so you could save thousands of dollars in out of.
And that's why we say a break back below 1250 would be bearish. But for now, you can see we've cleared 1275, which is bullish, and it's right about here. So we should push 1300 in the morning. If we take a look at the NASDAQ chart, that's Bloomberg in the background. Sorry for the extra noise, but it keeps me occupied. Okay, so let's look at the NASDAQ real quick, and I've talked a lot about the 2600 level, and you'll see it pretty clear on here too. But since we've passed that, it's been bullish, and tech has actually led the way higher this year. So you got to play the trend. Let's see. It won't let me copy that first chart for some reason, so I had to go to the next chart here. Hold on. Let's see. Okay, let's go over the breakout above 2600 and how it's held as support. So you can see 2600. I'll try to draw some where it's tested support, like right here. Okay, and then lately I've been talking about how we need to break 2700, which we have right here, and it's holding for now. As you can see, we closed above this level, but last week we dipped a little bit below it a couple times, but in the overall scheme of things, it's still bullish. I'll show you. Let's just go from this point here. We're still bullish. So that's why we say a break back below 2600 or this 2550 level would be bearish. But for now, the 52-week high is 2882, I believe. So if we can get through the earnings season with some of these tech companies coming up this week reporting, then we could set, the NASDAQ could set a new high, which would shock a lot of people. But we've been calling for the rally. The only thing we're worried about is after the earnings season is over, then what would be the next catalyst to take us higher? We're not sure of that. It could be some kind of energy deal. It could be, jobs keep being created, the unemployment goes down, but that's a lot of ifs. So the charts are telling us we're going up, even with some of the year of bad news. I've talked about it decoupling since November, December. So some of the ways to play the indexes, even though we don't have any current trades on them, to play the Dow, if you wanted to play the Dow's run to 12,800, 13,000, you could play the DIAs. And as you'll see, they trade weekly and monthly options. So, let's see.
It's an Australian uranium company. Its shares surging the most in 3 months, up nearly 12% as they forecast higher uranium prices.
So we could look at the 125 calls, which are going for 55 cents. You know, you could play these just for the week if you think we're going to go higher throughout the week, or if you wanted to play a little bit further out, you could come to the February calls. And as you can see, you can buy the 127s or the 128s, which are around $1. You could go to the 130s. They're a little bit cheaper, but you know the market's got to run to the Dow's got to run to 13,000. So resistance is going to be at 12.8. So it'd be better to go with the 127s or 128 if you want to go further out. And again, if you want to play the January options, these are the ones you would play. Now, if there happened to be some kind of massive sell-off and the Dow tanked below 12.2, then you would come down here and look at the puts. Maybe not for January, but for February. That's going to be the target you want to go short. But until then, you still want to play calls. But again, if the Dow did happen to break below 12.2 sometime in the future, it might not this year. You know, you could play some of these cheaper options, like the 118s, which are going for $1, the 117s, and that's how you would play the Dow. To play the S&P, these are the options you would play. Not these. I'm sorry, SPY. And these are the spiders on the S&P 500. Same deal here. If you wanted to play around to 1325 with the January options, you could play some of these. The 130s are going for 75 cents. Or you could play the February options if you wanted to go a little bit further out. You could play possibly if the S&P ran at 1350, you know, you could look at some of the 132s or the 133s. And then again, on the way down, if the S&P happened to break below, let's say 1250, then you would seriously start looking at some puts, nibbling. And then if it broke below 1220 or 1200, then it would definitely be a trend change. And then you would want to look at some of these options. Like the February 119s are going for about 70 cents. Now, the other index you can play kind of straight up on the NASDAQ is the Qs, which look like they're going to break 60. The 52-week high here is 59.83, and if you look at the options, let's see, these are the January options, so you could do, now these expire this week, so these are the riskiest ones to play, but if you wanted to, you can see the volume here on Friday just in these options was 22,000, and they're going for about 65 cents. But again, with the 3-day weekend, not a lot of people made this bet. We left a lot of long positions open because we did feel like we were going higher, but because it was a 3-day weekend and because we had the Europe headlines, we did take some off the table. But if you want to play the Qs past 60, you could look at the February options. These are a little bit cheaper. The 59s are going for $1. And that's how you would play the move higher on the Qs for this week and next week, or until there's a pullback. Let's see if I can give you a chart real quick. Let's just do a Yahoo chart. We get a 2-year chart for the Qs. Let's make it a 1-year chart.
Let's talk about the drivers of growth, because you talked front of yours, it says your forecasts for GDP in the coming quarters, in the coming years, and also your forecast for private consumption. So as GDP falls, private consumption stays. It steadies. Is that a rebalance?
That is part of the rebalance.
Okay, you can see once we break out over 59, 60 is probably a given. There's 59, and you can see where we've tested resistance there and fell back, and we fell back there, tested there and fell back, tested there and fell back, and tested here and fell back. So, like I said, there's a little bit more room for the market to go higher, and even the Qs, but it's going to be tricky once we get up there if the breakout continues, or we're just going to test a lot of these upper resistance levels and then hit that trading range into February. So as far as some of the current trades we got, let's take a look at those now. Let's see. One of the favorite trades I have right now is our MGM trade. So let's take a look at MGM.
It does slow consumption and investment. Most people are focused more on the export channel, but it's really the financial linkages that have become more prominent in recent years, even as Asia has turned more.
All right, let me get the weekly chart because it'll be a better picture for you.
Let's
see.
It's one of the reasons why Asian financial markets haven't performed as good as we would like them to. Haven't purely reflected growth.
Underdeveloped or underperformed developed markets.
Underperformed last year, for example, partly because of deleveraging, but that will probably run its course in the next 7 months.
Frederick Neumann, co-head of Asian Economic Research at HSBC Holdings. Always a pleasure. Thank you very much. Thank you.
All right, the informed voices just keep coming here on Countdown.
Okay. As you can see, MGM was in a tight trading range for since September. Let's see if I can get that on here for you. This is kind of the trading range that shares have been in since, again, since August, September. Between 9 and 9/11. 9 and 12. But as you can see, we got this nice breakout on Friday just above this level. Right here. Okay, and then you'll see where this can become possibly support and resistance force going forward. 12. Let's get a better line than that. There we go. And as you'll see, here's 12 as resistance in the past, right there. Tested there. Broke through here and then traded up to 16, which is what we're hoping for. Then came back down and fell back below 12, and then came back above 12 again. We're hoping this goes to 16, and you can see where we're at. Another trade we really like, or I really like, is our STX trade. We've been talking about shares breaking 20, and we should get there this week with this one.
Oil, it's up in London, it's up in New York, NYMEX back above $100 a barrel, just where Saudi Arabia currently wants it.
Nigeria's oil industry has avoided a shutdown. Labor unions suspended a national strike against the lifting of fuel subsidies after President Goodluck Jonathan limited increases in the
Seagate Technologies. The break above 18 is when we got in this trade. Maybe it was a little bit below that, but you'll see why I was bullish here in a second.
Biggest oil producer is the
Okay, we got in down here, and then a break above 18, like I said, should lead to 20, possibly 22. Here's 20 right here, and then here's 22 up here. This would be what I like to call blue sky territory, and that's when a stock is breaking out to multi-year highs, because there's no overhead resistance once we get above 22. So Seagate has got a nice little niche going right now. We'll talk about it in the newsletter, but from a technical standpoint, it looks like it's going to break out or continue to break out. So if it goes to 22 plus, our current option trade is going to do very well. The other trade we're going to cover here real quick is Microsoft.
Well, these deposits are big enough to warrant investments in major LNG export facilities. Statoil's CEO said the geography is, quote, almost perfect.
Okay, Microsoft, a break above 28 was nice. We're looking for a run to 30, but the thing that worries me this week is earnings. I shouldn't say worry, because I'm hoping they beat estimates, which I think they will do. But they could disappoint. So if they do, we're going to fall back into this trading range. But as you can see, this break above 28 was nice.
Now you can see this is the world's biggest acquisition of leasing business, and they're buying 206 aircraft. They're committing to buy 87 more by 20.
It's 28 there. It's 28 there. 28 there. And this is from the July 2011 highs. Let's see. As you can see, and then we got 28 here, and then the break above. Like I said, looking for a run to 30. And the calls we have will also do really well. We might lock in some half positions ahead of the earnings, which is on Thursday. It just depends, though. I mean, we want to take a little bit of risk off the table, but then again, I feel pretty good about Microsoft. Okay, the next thing I'm going to cover real quick is earnings. And from time to time, we'll take earnings trades. But with all our open bullish positions now, I don't think I'll be taking any. And I'm not sure if I'll recommend any in the newsletter. But for those of you who want to get a list of the companies that report different weeks, just type in earnings in the Yahoo site, and then you'll get this calendar. This isn't, I guess, an exact date because they do change, but it'll give you a good idea of who's reporting this week. For Tuesday, the one company that's interesting to us is Groupon, and I will probably be talking about them in the newsletter. I don't see them on here, so again, they might report on Wednesday. Let's go through this real quick. As of last week, they were doing Tuesday, but that might have switched. Okay. As far as Wednesday, though, some of the ones we're looking at is F5 Networks, Fastenal. That's going to move. Let's see. We got Goldman Sachs as far as the financials, and Western Digital. That's probably a different date. It might be Thursday. We also got PNC Financial. So let's see. This is Thursday. We've got Bank of America, Google, Microsoft is also Thursday. Yeah, Microsoft is right here. They should be after the bell. Yep, after the market closes. They're expected to earn 76 cents a share. And who else do we have? IBM. Let's see. Yep, IBM is announcing Thursday. Intuitive Surgical. I think that's a $4 stock, so we don't even play it. But believe it or not, I've been watching it for a decade down in the double digits. But it won't split, so I refuse to play options on it. And then for Friday, let me check Thursday real quick. J&J's reporting. Who else? Intel's reporting. So as you can see, tech and the Qs could make a breakout if earnings for Thursday and some of these heavy hitters come in with decent results. And then Friday, GE. Let's see. Yep, General Electric. Okay, that's earnings. Again, if you wanted to play some of the earnings trades, you would just basically look at some of the charts and see support and resistance. Get the estimates, see if you agree with analysts, disagree if the company's going to beat or not. But again, I don't think we'll be playing any earnings trades, although I will be looking for some. Let's just say you had a hunch GE might trade 5% higher and after earnings, and you wanted to look at the February 20 options. They're going for 16 cents. But GE's normally not a big mover. It's not a high beta name, so a lot of people probably won't play that as an earnings trade. The ones I went over earlier, like F5, Fastenal, maybe Groupon. Let's see if we can get a date for them. Company events. Okay, they moved it out to February 8th. I thought they were going to announce this week, so that could be good or bad. As far as the chart, let's take a look at Groupon, because it might be a good strangle trade. I have to get a daily chart for it. Let's see. Now, the French car makers, Renault and Peugeot, they're not even present in the U.S. market, and they have very insignificant... Yeah, it's only been trading for a couple months, so the options are juicy. I'll have to take a look at it, but... there might be a play here. I'm just kind of thinking to myself while I do this video if there might be a play here or not. And now it's not letting me paste it. Let's try something else here. There we go. Like I said, it won't let me copy the first page in the stock charts. And it just started doing that, so... Alright, as you can see, this thing is... the breakdown from 23 has been pretty obvious. And this company is facing a lot of competition. And you can see where 23 was just a magnet. I mean, it did dip up to 25, but after it broke below it, it's been a magnet. Currently, we're at 19, so I wouldn't be surprised if this stock moved at least 15 or 20% based on earnings in February, but that's going to be a trade we'll look at in February because we don't want to go too far out before they announce. And as you can see, that's what we're looking at, possibly a 4-point move on earnings, which would put shares near 23 or back below support or 52-week lows. So another trade I like, and I'm going to check to see when they do earnings. I'm probably going to be late with this trade, which probably will keep us out of it. But as you can see, FedEx has done very well this year.
Rolling hot dogs, bag of ice, antifreeze, wash and dry, diesel, self-serve, fix-a-flat, jumper cables, 5% cash back. Right now, get 5% cash back at gas stations. It pays to discover.
There we go.
You are a business pro, lord of the carry-on, sovereign of the security.
Oh, that was Groupon. Sorry, folks.
And you rent from National, because only National lets you choose any car in the aisle.
Here we go.
You can even take a full size or above and still pay the mid-size price.
I deserve this.
You do, business pro. You do. Go National. Go like a pro.
Okay, the break above 85 was bullish, and I've been watching the transportation stocks, or the Dow Jones Transportation Index, and FedEx is kind of my favorite stock to trade when that index looks like it's going to break out. And as you can see, the break above 85 was super bullish for FedEx, and it looks like we could run to 95, but we'll look at the options here in a minute to see how expensive they are. There's 95. Now, if the market sets new highs or tests July highs, then FedEx could follow, and a breakout could lead to triple digits. So we'll look at some call options real quick to see what they're priced at. But you can see the resistance above 95 is going to be tough to clear. With that said, you know, if FedEx does make a run at it, we could use, again, the January options expire this week, but we could look at some quick February options. The 95s are going for $1. You could put a stop loss at 50 cents, and hopefully, if FedEx ran to 100, these would be worth 5 or 400%. Pretty good risk reward. So that's how I would play FedEx if the market continues higher and the Dow Transport they move higher. And then one last stock, because this has been a super long video and I didn't mean to keep it this long, is this stock, Echelon Pharmaceuticals. Let's see, CHN. It's kind of like it reminds me of Dendrian's chart. As you can see, we got this bullish breakout here, but I'll probably have to go to the 5-year chart on Yahoo. Yeah, this will show you the 18 target I have for it and where I got it from.
You're watching Countdown. I'm Lindsay Janis.
Let's take a look at how markets are faring. Asian equities, they are moving higher. Gains really across the board thanks to stronger than estimated Chinese GDP.
Futures are also moving.
Okay, the break above 8 for this stock was also bullish.
Looking at the currencies, the yen and the dollar, they are both weakening.
Gold is moving higher as the dollar declines, and oil is at $100 a barrel. That after Saudi Arabia's oil minister said that price is his target.
Let's get straight to our target. It's Zeb Ackard who can tell us what's influencing investors.
Okay, there's the break above 8.
Well, Owen and Lindsay, of course, it's the GDP report out of China.
You can see it was strong resistance.
Is indeed slowing. It's not as bad as
right through here. Okay, now we're at 12.
Take a look at the markets in Hong Kong and Shanghai. We are seeing a positive move for the Hang Seng and the Shanghai Composite today.
Which there's no resistance through here. So let's try that again. And then we got the break above 12, but as you will see, here's 18 right up here. So there's no really resistance from 12 to 18, but again, this is a biotech stock. At 8, I mean, shares could fall back to 8, but at 12, you could also look at this as a strangle trade out into February or March. That's in the manual, and that's where I'll leave it at, because again, this is a long video and I didn't mean to make it this long, but I wanted to cover the earnings, the current trades, and different trades that I haven't listed on the watch list. So good luck. We should be bullish this week, but keep your eye in the rearview mirror, because you never know when the bears could strike.